Okay, so I made a video earlier and I realized that it didn't explain certain things before I gave you all that information. So I'm just making a short video now and then I'm going to lead you to the larger video. All right, so this is a chart. Now, these are candlesticks, the green and the red bars. Um, and at the side here, these are the price of the particular asset. It could be crypto, it could be stocks, it could be anything. Right here, that'll be the price they are at right now. So this is Bitcoin right here, and the price of Bitcoin is now 108. And if I were to look on my phone, it will also say 108 somewhere at the top right there. So this is the price of Bitcoin. And if you get into a trade and Bitcoin goes from, well, let's say, if you get into a trade, all right, let me do a buy. Let me just show you how that works. Um, Hold on a second. Right, if you were to get into a trade and Bitcoin went from 108, let me close this out, easier to understand. I'm going to put it right here at the price that it is right now. If you buy it at 108, 108,000, and it goes up, well, 108,300. If it goes up to 108,000, 596, and you use 10 contracts, then you made $2,500. I'm going to change it to one contract so it will be easier to understand. If you just do one contract, you just made $240, right? So you can trade a number of contracts, and this is an overview to the introduction, so it's not a total lesson right now, but so that's how it goes. Now, you can also, so if it goes up, you make money. If you buy and the price is going up like it is right now, you make money. But if you're buying and it suddenly decides to go back down, you could lose money, right? But you can limit the amount of money you're losing or making by using a stop loss. So this green bar here, I can move this wherever I want. This is my take profit. I can take profit anywhere. If I feel like the price is going to go all the way up here, then I put my take profit here, and I'll make $690 some dollars. But I have a stop loss down here so that if it were to go against me, because maybe I'm wrong or something and it goes against me, the most I can lose, I can decide how much I can lose. I can lose $84, I can lose $165 or whatever, right? So this can go anywhere. And this is just an overview. There's a technique on where to put it because you can't just put it anywhere. So we'll go over that another time. All right, now looking at the chart right now, it just looks like, how am I supposed to know where it's supposed to go? Right? There's no, how are you supposed to guess like where it's supposed to go? So there are certain points that it will probably go there again. And looking at it here, I can see it reached at the top here twice, right? And then so it reached up here, and then it reached there and it came down. It'll probably do that again and go back there. Or it may go back here again because it reached here and it came back down. It might do that again. Or it may not. Then we have something called a trend. What is the trend that it's doing? Is it going up here and coming down and then coming just a little more and coming down again? Is that a trend? Do we see that it's going from here and it looks as though it's coming down? So we call that a downward trend. So which would mean if this is true, if it went here and then it came down lower and went down, then it's probably going to come up to here. Let me change this to, it'll probably
It's 10 o'clock.
come up to here, all right, and then go, oops, and then go down because it looks as though there's a trend um, going down, right? I don't know if by the end of this video this will, you know what, I can show that in another time frame. So by the end of this video it may or may not reach there, who knows. So there are different time frames and this is a lot to take in, so but we'll go into more detail another time. This is a 15-minute time frame, 5-minute, 30-minute, 1 hour. It just means that I'm on the 15-minute time frame right now. So it just means that it takes 15 minutes for this bar to be formed, 15 minutes for this bar to be formed, 50 minutes for this bar, 50 minutes for this bar. So each bar will take 15 minutes. If I were to go into the 5-minute time frame, each bar will take 5 minutes. This red one took 5 minutes, this green one took 5 minutes, regardless of how um, tall or short the bar is, it took 5 minutes to do that. Okay, here we see a trend within a trend right here, actually. This is a weak, not a weak trend, but this trend is actually getting ready to break out to go up here. So it's kind of from a downtrend, it's probably moving into an uptrend. If I go to the 1 minute, it looks flat. So we call this no trend because it's just relatively going straight. Don't try to trade when things are going straight. You want to trend, you want to trade when things are in an uptrend or a downtrend. Because let me close this out. All right. So because when the first example I showed you was you can buy if it's going up, but you can also and you're going to make money, but you can also sell if it's going down, and you're going to also make money, right? So if I realize that, oh, this is going down and the market is going down today, then I will enter a sell trade and I can make money going down, right? So you can make it going up, you can make it going down. You could probably make it going sideways, but that's risky, right? So I try not to do that. That's kind of risky. Again, this is just an overview. Okay, Now, looking at the chart right now is just it's just too naked. You can't see anything. You're just seeing bars, and you're basically guessing almost. So what we do, we use indicators, and some indicators use AI. I made some indicators that use AI to analyze the charts. Some will just draw lines, not necessarily AI. So I use a mixture of both. So let me just show you something here. I also program my own indicators. So all this is like programming language, all this is like programming code. So I would write all those codes so I can make my own indicators. I'm going to show you what this one looks like. I actually made this one, so I'll show you what it looks like. Okay, now, remember I drew some lines on the screen and stuff like that? Right. This is almost like it. So this tells, when I have these on the screen, I can tell a little bit of what's happening. So this particular indicator that I made uses something called moving averages. So what is a moving average? So let me take it off again. Let me turn it off again. So a moving average is simply what is the average of the length of each candle. So let me do this. Exponential moving average. So I'm going to make an exponential moving average of 1. Move my face. Okay. So this blue line is an exponential moving average where of it just follows the line. It follows the candles. It'll take, so when we say average, we mean, let me make this bigger. This candle right here, what's the length of this candle? Right, from here to here. And it'll take the average of that, which will be in the middle. The high of the candle plus the low of the candle, and you divide that and you get the middle. The high of this candle, the low of this candle, the high of this candle, the low of this candle. So it's only one candle, so it looks like right on the chart. But what if I wanted to find out what was the average of more than one candle? Then I might change this to, let's say, 2. In reality, you don't use 2, but I'm just showing you something. So now, oh, wait, it looks different. When I change it to 3, the line looks a little different, right? Let's go back to 1. See, it's very sharp edges, goes up, goes down, goes up. That's just going up and down. As the candle goes up, the line goes up, and the candle goes down, the line goes down. But we don't use that because it's too jagged. We want something a little more smooth. So let's try 4. If you look at the blue line, it's getting more and more smooth. Let's try 9, which is a popular one. A lot more smooth. So it's taking the averages now of 9 candles. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So this is the average of all these 9 candles. So you have a better idea of what's happening. Is it mostly going down or is it mostly going up? Right? It's just taking the average of the high and the low, high and the low, high and the low. Again, when we had 1, it was just way too jagged. It doesn't really tell you anything. It's just saying it went up. So okay, I could see that. So what are you trying to tell me? So now, if we have 9, oops, I closed it out. It's a little more smooth. It's not as jagged. We can see an overall trend of what's happening. It's even though it went up, down, the overall trend is that it's going down. It's not as jagged. Now let's try another popular average. That'll be 20. Okay, now we can see even more that it's just basically it's going down. Okay, so there are more that we can use, but I'll just leave that there for now. There's the 50, the 100, the 200, but we'll work on that later. Okay, so keeping that in mind, what I did with my indicator, I have the 200, so I can see what this is, the 200 means what the candles are doing, the average of 200 candles. So it gives me an overall picture of the market. It's generally going down because it's underneath the 200 average. Then I have the 20 average. Again, it's generally going down. I have the 9, which tells me it's going down, but if the 9 moving average were to go above the 20, that means it's starting to go up again. So when it's going down, I just want to sell, sell, sell. But if I see that it's the 9 moving average is going up over the 20 moving average, then I want to think of buying. If it goes all the way above the 200 move, I definitely just want to buy because it's going up, right? More on this later. This is just an overview. All right, so I'll leave it there. I just wanted to show you an overview of the longer video that you're going to see and some other things to consider, which is that's another overview. So there are 2 overviews, and then we'll go into detail on each one another time. Okay. Anything else I should show you here? Let's see. Just to show you what the other one will look like. This will take into so there are other things you consider when you want to go, when you want to buy or you want to sell. So not just the moving averages to see what's generally, is it going down or generally is it going up. You want to look at other things, and we'll talk about those later. These are other things you look at, other things you look at. We're going to talk about those later. All right, so look out for the other video.